140, 65. Those are kind of like my strangles.
Yeah.
And they're April. You could not March anymore, but April premium. I don't see a better play. You know.
Awesome. Okay, so by the way, you can see Tom's recent appearance on Anthony Pompliano's podcast, posted at the bottom of our Lossdog YouTube channel.
Yeah, I mean, he's an interesting character. He's a kind of a crypto guy, but he's also a money manager, and he's built some really cool AI tools. And we've had some fun podcasts. I did a bunch of podcasts last week, and they're all out there now, so I'm all over the place, like Tony used to say, like poop.
Oh, okay.
Nice visual. Thank you
Nice
you
visual.
for that.
Yeah, but I also talked about selling premium in crude oil yesterday with Dylan on our podcast,
That's
which is coming out this morning. Which, depending on what side of the political fence you're on, you're either going to love it or hate it.
But go watch it.
Yeah, I mean it's a fun one on the Iraqi war and different.
Iran. Hopefully
Yeah.
Iran.
I
not
mean, the
Iraq.
Iran
If we
war.
start-
Yeah,
if
Iran,
we started-
Iraq.
If
you
we have
know,
another one that we've
something-
started, that's
Yeah.
something that begins with an I. And
Right.
we talk a lot about selling the F out of premium in crude oil. Now, just so you know that there is some risk out there, if you saw this morning kind of what happened to gold and silver, you can see that selling the F out of premium in gold and silver, which I did sell a lot of gold premium yesterday, did not work. And it was, I stepped up to the plate about a day too early. Gold's down 264 now, but it was down 330, 340 just a little bit ago.
what did gold? Did it trade
4,500 almost.
Wow.
It traded
Really?
56.26.
What?
And it just
Overnight?
traded, no. And it just, this morning, and it just traded about 1,000 points lower than that.
Yeah, no, that was on January 29th. It traded 56.
Yeah.
That's what it looks like. Yeah, now it's 1,000 points lower.
Yeah, so if
And
you followed like the whole macro story in gold, because we're going to cover this, like
Yeah.
you'd be looking around, you'd be like, oh my God, the world's at war, let's flight to quality, all this kind of stuff. That's why when people are making these ridiculous use cases back a couple months ago in gold and silver's going to, $1 billion, gold's going to $1 billion. You got to realize the markets are very emotional, but
Yeah.
there is, and I probably said this 1,000 times, there is no freaking macro story behind all this stuff. This is just an emotional.
I don't agree with you.
Well,
I
you can
completely
disagree
agree
all
with
you
part
want,
of that.
but
I
it's
don't
what it
agree
is.
with the other part. There is a macro story to be told, but this to me was just pure pandemonium.
There's a macro
and-
story to be told, but there's not a macro story to trade on.
Well,
There's
speaking
no
of which,
macro story that would support gold at 5,600 and silver at 120.
Our
Okay,
friend Tony
that
says,
I agree with,
"Whoa."
but I think we're watching a macro story play out. We'll see, give it another month, 2, 3, 6 months, and see.
I
where
could
we
not
go.
disagree with you more. I think we're watching we're watching the 2026 version
Yes,
of a meme
for
stock.
for oil, and for gold, for silver. Yes, I'm
Yeah,
talking
that's
about
what
for
it
the
is.
stock market. I'm talking about for the stock market. Let's see where we end up.
We're not talking about the stock market. We're talking about gold, silver, and crude oil.
Okay, but you say macro doesn't matter, and I think macro can matter, and I think macro will matter for the overall stock market. That's it. I think we went through a meme phase with 3 commodities.
We are
oil,
discounting everything you just said to all the great viewers out there that have been watching for years about
Yep.
macro means nothing. Disregard what Scott said. He's delusional.
Okay, well,
Okay.
our friend Tony.
So let's just ask a question.
Okay.
If SPOOS,
Yes.
let's just say if SPOOS,
Yeah.
do break 1,000 from here.
Yeah.
Just if they do. I know it's not likely, but
Yeah.
if they do,
Yeah.
you're going to say that had nothing to do with what's going on in the world right now. That was just timing and the market was overbought and we just sold off.
Exactly.
Okay, great. And I'm delusional.
Yes.
Okay. I guess
We
we
have a
have
question
a
on this
different. I guess we
saying,
have a different
"Whoa, what's with gold this
understanding of what
morning?"
delusional is.
Not exactly a flight to quality, is it? Says our friend Tony.
Your friend Tony is exactly right. It is not exactly a flight to quality.
But it's never been a flight to quality to gold or silver. And I love that. I remember having this conversation a while ago with somebody, talking about when it crossed, 3,000. They're like, oh my God, it's a flight to quality. I said, if we need gold and silver as a replacement for cash, it's over.
Again,
It's
you're
not a flight
thinking
to
about
quality.
don't think about this thing fundamentally. Don't think about this thing Technically,
trade.
fundamentally, it's a trade. Just watch the
Yeah.
tape. Markets are emotional. Any commodity is just it's just an asset class, and asset classes get emotional. That's the
And
beauty of it.
greed
That's what
and
makes-
greed and greed
Of
and fear
course.
take over.
Greed,
yeah, so greed and fear
emotion,
take over.
everything.
The greed is I want to get on the train. The fear is I'm going to miss it.
Yeah, that's it.
And now, what does somebody do that bought silver? You know, obviously we were way too early selling
Put it under your bed and hold it.
Right. So if you now have silver, you know, at 110, 115, 120, what do you do with that right now?
Yeah.
Well, I'm more thinking of the guys that at the pawn shop who had to buy the silver $10 under, and where they're like, well, there's got to be an okay deal, but how now? What do you do? You're choking on a lot of silver.
Well, my guess is they got out, but who knows?
Yeah, it's not that easy. Yeah.
They were selling 10-ounce things of silver at Costco yesterday at like $85.
That's probably fair. I mean,
Not 10
listen,
ounce.
Yeah, a 10-ounce.
Well,
little
$85.
thingy.
It doesn't matter what.
$85 an ounce.
$85 an ounce, of course.
Yeah.
Yes.
I mean, the reality is that
I mean, I love Costco, but they're not.
at $85 an ounce, it's not. I mean, silver's what, 70 this morning?
69.
Yeah.
Yeah, 70. So it's right at
70.
70.
Sure.
I mean, where would you sell it? 80. I mean, it's down $8 today. I mean, it was only $7 below the market. $7 above the market yesterday when they probably posted it. Costco doesn't know what it's doing today. I mean, I think
Right.
that's probably pretty fair.
Yeah.
If you want to buy some, you can go to your local
Well, I don't
Costco.
want to buy some, but if I was going to, I don't think that's if I was pricing it for Costco, I would probably be higher.
Of course you would.
Yeah. Like, but if I was running Costco, I wouldn't be at 85.
Right.
But you could go buy for less right now.
Where?
So anyway,
Where?
what do you where?
You think
go
you
buy
could go out-
futures?
Yeah, that's futures. But let's just say you don't want to buy a future because you're just Joe Blow walking
Why
into a
would you want to buy
Costco.
solid?
Because
Okay.
people like the physical.
Silver.
They like to have the physical. But if I want
For
to buy,
what?
because they like to have it. Because in case who knows, you just
In
want to have.
case
In case
What?
what are you gonna do with 10 ounces of
I don't
silver?
know, but it's a cool gift, whatever. But let's just say you
Fine.
want 10 ounces
It's
of
a
silver.
gimmick. It's a gimmick. It's
It is a
nothing
gimmick.
more.
Okay,
If
you go try
wanna
to buy 10 ounces
listen,
of silver right now in physical form. You're not buying it at $70. Period.
Okay, I'm not disagreeing with that, but
Maybe
but
you
again,
can buy a gross old silver chain that's been lying around for $80, okay, an ounce.
Hey, do you have your chain from the 70s?
I don't get it either.
I
but
never had
anyway.
silver.
Oh, you definitely
mom does
rocked.
have
You definitely
silver
rocked the
jewelry from
herringbone
the
chain back
70s.
in the 70s.
I never rocked a gold chain. No, I never
No?
had anything. I've never worn a single thing.
Really?
I never wore a watch. I tried to wear.
Scott, I think you need to rock a gold chain.
Me? I
Yes.
Yeah,
did. In
he's
college, I did.
He's an old school, like.
I
you
had
know,
a chain. I had a
Jew.
pinky ring.
Good.
pinky ring. Yeah, I
Pinky
could see.
ring.
I could see you with the earring and
No
like,
earring. Never had an earring. Never had a pierce. Never had a tattoo.
I can understand the tattoo and the piercing, but I could see you with the earring.
I think a nice
Well,
chain would be good.
But an earring is a
Yeah, I know,
piercing.
but that's an ear piercing. Like I'm not talking about the nose
That's a
piercing.
little more invasive.
You, I could see with like no tattoos.
Oh no,
but-
no! Don't go there. Here it comes. I could.
What?
All right, next.
What?
What?
Nothing.
No, don't. Yeah, don't. Okay, the dog pound is asking if spot is at 6,000 and futures at 6,100, is 6,000 the at the money option, as the textbooks say, or is 6,100 the at the money option, as some traders say? Could you please
It's
clarify from a trader's perspective?
It's the
Yeah, go ahead.
if you're the trading the future, it's 6,100. It's where the future's trading.
Yeah.
Right.
It's where the future's trading. So it's what your underlying is trading. And futures are futures, and cash is spot. Cash is cash. So, you know, if you could trade an option on cash, you'd be trading 6,000. But if it's on a future, it's 6,100. Is that the money?
Yeah, yeah. It's always what the future. It's what the underlying
What you're
future
trading.
is. That the options you're trading are whatever settles into that underlying future.
Okay. All right, next up. I was looking at the /SI options chain yesterday and noticed it only lists expirations out to July. Not much of a future, is it? Why does silver have such a short dated options market compared to other futures? Says our friend from London or the UK, Julian.
I'm not sure that that's actually correct, Julia.
It's not.
Yeah.
It's not correct.
I'm not sure that's correct.
Yeah, the simple answer is and I will speak for Tasty when we were there, you don't want to offer, there's so many series in futures, and the problem is only the front handful are liquid. After that, they become really illiquid. So we didn't want to allow our customers to get into trouble because that's what's going to happen most likely if you go trade it. So we just limit, we just wouldn't show them all. There might be a platform that shows them, but I actually pulled up silver, and it looks like for silver, the CME goes out to May of 27.
Yeah,
so
I would think at least.
It goes
I
out
would think
much
at
further.
least.
I'm sure there's options on those, but again, the markets are probably so wide you could drive a truck through them. So, if I could tell you for Tasty, my guess is other platforms are doing the same thing. Retailers saying, listen, there's no reason to list those because they're not really tradable.
It's really dangerous when you show options that don't trade, and then somebody makes a mistake and puts in an order, and that's like, on a $10
$10 away.
loses $10,000 and then tries to break the trade and he can't. So there's a reason firms don't show those options. That's why it is.
Okay.
Yep.
But they exist.
Yep.
Okay. Next.
And you can trade SLV options. They go out, probably leaps, I'm guessing, go out a couple of years.
I will tell you, SLV.
They probably go out to 28, I'm guessing.
They do. D's 15 to 28, 1,002 days. You want to take a guess? Let's see how good your market is.
D's of, what'd you say, D's of 28?
D's 15 of 28, so it's 1,000 days.
Okay, that's almost
what do you
3
think?
years.
It's 63 and a half. You want to take a guess on what the straddle is?
60.
What do you think the expected move going out that far?
It's got to be at least.
It's lower than I thought it would be.
It's got to be at least $40 to $50.
It's a good guess. $39. That's lower than I thought it'd be. It's $39 if you want to trade that.
Okay, I was going to say 40.
Yeah.
All right.
Yeah.
Let's take a call. Steven from Miami. Hi, Steven.
Hi, Steven.
Are you there?
I'm here.
Oh, hey.
Hi, what's up,
Are you
Steve?
there?
Yeah, we're here. What's up, man?
Hey, good morning. Good morning, everybody. Actually, I got a few questions. I know you like questions, but I'll only ask 1.5 today, and I'll save the rest for another day.
Perfect.
Okay, great.
Here's the question. By the way, I listen pretty much every day, not always live, but just so you know. So I appreciate it all, and I mentioned that before. So here's the question. You guys talk a lot, you and Scott and Tom talk a lot about when you were trading in the pit. And I've been hearing this for years. And, it was people yelling and screaming and jumping around and the hand signals, and you're sometimes into just one underlying. But you never mentioned, and I don't know, what actually happens in the pit? How do you determine I'm going to buy it, I'm going to sell it? There's no charts, there's no option chains. What were you, if you could break down to a greater detail what was happening and how you were making money?
I'm going to say it's really funny because Tom and I would take people on occasion. We would do some events down on the floor, and we might have 100, 200 people on the floor standing in the SPX pit or the OEX pit. And this question came up all the time. What are you looking at? What are you basing your trades on? Because I think there was a thought process, a misunderstanding that traders have all this crazy amount of information and knowledge. And when you got down on the floor, what you saw was basically a 50-year-old TV screen with either the Cubs game or, some crappy news channel on something like that. There was nothing. So as a trader, all we would want to do, you knew what orders brokers had around you, or some of the orders, you didn't know everything, but you knew if there was a big order. And all you're doing is you're just trying to make, at the time, eighths and quarters, now nickels, dimes, 15 cents, 20 cents. So you're trading what's called edge. So you're looking, and now most people are trading off of theoretical value. So you're looking at theoretical value, and you're saying, look, if theoretical value is X, and they're trying to sell for 25 cents under or 25 cents over, I'll trade that. That's it. There's no, and then you look at your position, and the same thing as we would do now, you have to monitor your position, because if the paper's all coming in selling calls and you're buying the calls, you got to do something to offset that. So you might look to offset that with other calls in the pit, or you might trade futures against it or stock or something. But there's no magic to this. This literally was just trading the paper.
That means.
So what made one person successful and another person not successful?
It was a bunch of things. It was
that's
speed.
A good question.
For successful people were faster, and successful people kept their positions in check. and successful
Right, yeah.
people kind of knew how to spread their positions off, and they also knew how to participate in, you know, plenty of different trades and plenty of different orders. They were multi-dimensional, and people that were not successful were very one-dimensional, and they were a little slower. And this was a game of a combination of speed, a little bit of perception. I mean, remember, this was a 90+% failure rate. So the people that survived, usually once you had reached a certain amount of time, you usually were a survivor. And then at that point, you know, you're just hanging around with a lot of other survivors. And
Wow. Never heard us described that way, but okay.
but that's really what it is. I mean, in the end, it's just whoever the survivors are, and it's all, you know, and you're not really trading with one another. You're only trading with the interaction with customer orders and professional orders. And so, you know, it just gets to be, it's no different than any other grind and any other role. There's just more upside and more downside. And, you know, and I wouldn't think of it too much different than any other job, just very, very physical, and a lot of games.
I could say for sure I remember the day.
It was gamification before there was gamification.
That's right. It was gamification.
There's a
I
lot
can
of
tell
yelling
you.
and screaming and jumping around. It sounds
Yes, and getting hit and spit on, and it was nasty. But my best
Like a
day,
monster.
my best day trading in the pit, I came out. I had no idea what the S&Ps did. No idea. Because it was just they
So
were
you were
moving
just
around
buying and
so
selling,
much.
buying and selling, whatever it was.
That's exactly right. There was a lot of movement, but at the end of the day, I'm like, what they even finish?
There was a lot of
So-
days I
So
came
you
off.
had to be louder. You had to be louder and more obnoxious and bigger in the sense physically bigger than other
You
people.
couldn't be louder or more obnoxious because every single person was loud and
Was loud and obnoxious.
There wasn't even like you couldn't you
single
couldn't outshine.
person.
Every single person was the exact same personality.
And when,
And so,
when I started, somebody said to me that trading in the pit was like flying an airplane, 90% boredom and 10% fear. And it was pretty funny. I wouldn't say 10% fear, but it was a lot of boredom. You would stand around a lot of the time, nothing going on. And all of a sudden, boom, something happens and you've got to be ready. And to Tom's point, speed, it was amazing to watch. You know, how quick some people were able to come up with markets, you know, so much faster than others. Others might jump on and say, yeah, I'm there too. But brokers would always go to the first person and say, okay, here, you get the majority of the order, whatever you want. So it's great.
I imagine it was. I imagine it was one of those things that you really had to experience to really understand, because sometimes from the outside, like, and looking back now, 25 years, it's like it's hard to really picture or imagine what it was like.
oh, it was fun. It was great. I wouldn't. have
It
traded
was
for
great,
anything.
and it's interesting because it's gone. I mean, it's completely
gone.
over. Everything, you know, it's screen based now.
Our
I mean,
buddy
yes, there are
Chester
a
is
handful of
asking
pits,
how
but
many
not
women
like
were
what
in
it
the
was.
pit.
There was a
Yeah,
handful.
I get that. Here's
Handful.
my half a question, and so I can leave on. The half a question is, so I know you've been with Tom and Scott for a long time, and I didn't know if it started at Tasty or Thinkorswim or before that. What is your history in terms of either trading or working? Did you work on the floor?
I did.
Kind of curious about
I
this.
worked in the equities first, and then I went to work in the OEX for my BFF Bruce. Shout out to Brucey. And that's when I met these guys. And then I went to work at Thinkorswim, and I did a little bit at Tasty. So we've been friends for a long time.
So were you on the floor? Were you louder and more obnoxious and bigger and scarier than Tom and Scott?
I was not.
She lost a lot of weight. If she was bigger than
Her
me,
trading
Scott,
days, she won a
lost a lot
solid
of weight.
yeah, she's won a solid 230 in her trading.
230 to 250. Yeah.
No, I
But you
was
came
not.
out- you came out of all that great.
You know what? I ignored all the loud and obnoxious and everything else. I learned to ignore it and have a thick skin, because otherwise you wouldn't survive there. I mean, I remember
Okay.
girls would come in and leave crying the first day, like within hours.
So would boys.
I don't know.
Got it.
I don't remember.
Yeah.
But girls definitely, I remember,
the women-
would
on the
leave
floor,
the
but you
women-
can't really trade
crying
now, it
within
sounds
a
like.
couple of hours.
The women in the pits, though, they were tough. I don't care. They,
Yeah.
those-
Well,
they
you
were,
had to be.
They were stone cold killers.
You had to be, yeah.
That's Steve. We got to run, man. We got lots of people. We got to go.
Take care. Bye-bye.
Thanks.
See you, man.
Bye. All right. Well, we're going to take this other question that's not OEX or anything related. I graduated in finance in 2012 with the goal of working in financial markets. However, my career has since been in supply chain analytics.
Okay.
Now I'm in my mid-30s. I'm considering pursuing the CFA and transitioning into a role in research or buy side, leveraging my coding and analytical background. But I have hesitation about the shift considering the relevance of the CFA given the increasing role of AI in finance. Your thoughts?
Well, we had a
He's
question.
also, he says he's in his mid-30s.
Yeah, we had a question
So
like
he's
this
hesitant.
a while ago, another CFA question. I mean, CFA is hard.
It is hard.
I'm not exactly sure. I'm not exactly sure why anybody does that, except that it's.
Nice.
I mean,
Hey, no, he doesn't mean that in a mean way.
I don't mean it in a mean way. I just don't understand.
CFA.
I mean, I guess if you want to manage money, there's more opportunity.
I think if you're a believer that AI is going to have a major impact, not only in the financial markets but just across the board, from my perspective, this is one that you probably want to be careful with. It's a really, really hard license to get. You're going to put a lot of effort into it. I'm not saying it's going to go away, but if people are able to get their information, which we think they're going to, differently, certified financial analyst, it's like, is that a replaceable, item by AI? I'm going to say to a large extent, it will be. So I would be, I would be careful with that.
Yeah, I'm going to disagree in the sense that it doesn't cost you any money. It's just you got to study your ass off, and I don't see how it hurts you. And if a lot of other people are thinking the way you're thinking, because they're thinking that AI is going to replace that, I have seen in the world of finance that legacy firms don't change very quickly at all, and I think that the CFA may have more value to certain firms than if there's
Sure.
less people taking it. So I would argue that it's just your time, that's your resources. If you're considering pursuing it, go for it. Don't let AI ever scare you into not pursuing whatever it is that you want to pursue. Like, I'm not believing half the crap I read about AI is going to eliminate this job, AI is going to eliminate this, AI is
Right.
going to ruin this,
Right.
AI is going to do that. Don't pay attention to the naysayers, okay? Everybody has other objectives.
I have a question. Why
motives.
is that a naysayer versus somebody who believes that it's going to be transformational? So if you would have said,
I
go
believe
back to
AI is
before
gonna
the
be
internet, if you would have said that you're getting that this show could have existed, you go, oh, that's crazy. It's never going to get there.
I believe that AI is not going to be transformational. It's already
It is.
transformational.
Correct.
I don't even for 1 second think that that's not the case.
But you do think that some jobs are going to be impacted by it?
I think that it's going to create more opportunity than it's going to take away.
Not saying, I'm not disagreeing
Okay,
with
so
you.
in that
but-
case, I don't think, since you can't tell me what it's going to create,
Yeah.
then I think that even worrying about the AI's increased role in finance is just, it's too negative for me. Don't even let it come into play.
Okay.
The good thing is, with our Lossdog technology, this guy, I don't remember his name, will be able to plug in his information and see, options of whether he wants to pivot to other fields.
Yeah, you'll be able to. You'll be able to plug your own information. And it's not going to tell you whether AI is going to disrupt
Not
whatever you're looking
AI,
for.
obviously.
But it's going to tell you that kind of what your value may be if you switch field. Like if you're in supply
Yes,
chain
if you
analytics,
switch. Yes.
it can give you an idea of supply chain analytics relevant or as compared to relative as compared to a CFA in finance.
Correct.
Yeah.
So, there you go. All right. We're going to move on. What are the ideal numbers for portfolio theta? A recent video I saw said 0.1 to 0.5% of net lick, depending on volatility. Others have said 0.1 to 0.2. Which is more accurate?
0.1 to 0.2. I would
Okay.
say that in a perfect world, based on all the research we've done over the years, 0.1 to 0.3 is the range, depending on account size. And I think if you get to 0.5, you're way too much gamma risk, way too much theta unless it's a tiny account. But for an average size account, 0.1, sometimes you even be less than 0.1, but current volatility, 0.1 to 0.2 or 0.1 to 0.3 as a percent of net lick, that is far more accurate.
Okay.
Yeah, people that say 0.5, I think that number is way too high and it's impossible to sustain. I mean, I think you'll be chasing your tail. I think at 0.2, it's a really nice sweet spot. 0.1, it's fine.
Okay. Arthur from the Dog Pound says, do we think there is a trade in U.S. LNG companies, I don't know what those are, such as ticker LNG? Thesis is maybe the damage in the Middle East is significant for an extended period of time.
What is LNG,
Thoughts?
Scott?
Chenery Energy.
So it's the energy?
Cheniere. It's traded 4 million shares of stock today.
Yeah,
Options are not good.
Yeah, Arthur, I don't even know what.
Options are horrible, actually.
Natural gas.
Oh, it's a natural gas company. Got it. Natural gas has been a PIG pig. When you think about natural gas, it just barely crawled back over $3 recently. It's been.
Yeah.
So I looked yesterday to see my best
liquefied natural gas.
Liquefied natural gas. Got it. Thank you.
So I looked yesterday at my P&L for 2026 year to date, and I wanted to see what I have done good in and what I've done bad in, because I don't really ever break it down. Probably like 100 different underlyings.
Sure.
My worst performer,
Natty gas.
Natty Gas, which I can't believe because I haven't taken a single shot in there. I'm just short strangles. Like I haven't had any directional bent, and it's been my worst performer in 2026 so far, which means that I've gotten caught up and I've gotten caught down, and I was shocked by that. I was like, I didn't even think I lost any money in there. That's been my worst performer.
There you go.
Yeah. So I don't know anything about liquefied natural gas, to be honest with you, Arthur, and I don't think I've ever traded LNG. And like Scott said, if the option markets stink, and listen, natural gas, I mean, it's been trading, it just rallied like 30 or 40 cents from like 270. It's been pretty, I guess it hasn't been a good trade this year. Because if I'm just short strangles and I'm not up money, that means it's been really hard to make money in there.
Okay.
Because I haven't taken a single shot in natural gas.
Oh, Marcus. Yes, it was Marcus. Sorry, Marcus. He's in the Dog Pound. He had the question, I think, about the CFA. All right, let's take Mark from Scranton. Hi, Mark.
Hey, Mark.
Hey, good morning, everyone. So I wanted to start off by saying I apologize. I've called several times, and I haven't wished Tom a happy birthday earlier this month, so I do apologize, Tom. Happy belated birthday.
Thank you. I've been heard about that.
Oh, so offended.
And I also wanted to wish Karen, the super trader, also a happy birthday in heaven, because she does share your birthday too, Tom.
She does? She did? Oh.
Yeah.
She did, but she's passed.
I know. He says
He
in
said
heaven.
in heaven.
Oh, in heaven, yes.
Well, we all
I didn't know
wish
she
her
had the
happy
same birthday.
Same
Yep,
day?
they share the same birthday.
Wow.
Great traders share all the same birthday, I guess,
There we go.
But I also, I'm hoping that you guys will apologize to me. My ears were ringing yesterday.
Oh.
And I can't believe you were calling me Mike from Scranton.
Oh.
I didn't say Mike from Scranton.
No.
Who said Mike from Scranton?
No, I think Cesare. I think
Oh, yeah,
Cesare
correct
from
him.
Philly.
Yesterday.
Yeah.
He
Yes,
messed up.
yes.
And then we all went to, Mike. Maybe.
Yeah, he
But I don't remember it.
well.
But we're going to have all the names down correctly for the community, so don't you worry.
Hey, we got lots of
There you go.
lots of people with M names from Scranton.
We do?
No.
No, we don't.
Okay, well, good. I didn't know it was that big. Maybe I could eat a few of them,
Yeah.
But I do have a question for everyone, and I can tell you what I'm going to do, and you can kind of twist it into any entrepreneurial or any business venture that you want. So I do have a few rental properties where I do have a lot of equity in them.
Good for
And
you.
I feel my equity sitting there is a waste. That I only make money on appreciation, and it's not. You can't count on real estate appreciation, especially in Chicago. I know, right?
Mm-hmm.
But I am going to either sell or take the money out, cash out, refinance, and I'm going to invest in the market. Now, what would your advice be if you believe in something, whether it be starting a Subway franchise, another franchise, upscaling a business, or just trading? What would be your advice to saying going for it or not to go for it?
Tom?
Well, I mean, I wouldn't go with the Subway franchise idea. That would not be my choice. I mean, I like liquid products, so I'm fine with, a diversified portfolio in the stock market. I mean, I like to mix it up a little bit, like some longs and shorts and a bunch of option positions, but you do whatever is the most convenient and the most comfortable for you. But I see no reason not to mix up a portfolio of, things that you like. Why not?
Yeah.
You do that with real estate, it's the same thing.
Well, real estate's not liquid, but yes.
Yeah, real estate's not liquid, but right.
What is the
Yeah.
growth, like, do we know, like, with a franchise like that?
With what?
Like annual?
With a Subway?
Yeah.
I think zero.
I just threw an example. I'm not
Zero?
looking to get in the Subway.
Yeah, no.
Yeah.
I mean, I don't know. With the stock market, it's been good over the last 2 decades. It's
Obviously.
it's been plus 10%, but it also depends. I mean, if you're going for some dividend stocks or you're going, I mean, we've done pretty well in the stock market. I'm just gonna, I'll leave it there. That's our space.
Yeah. I think I could do it. Mechanical, I think I could do it. I think I got my mechanics down.
I think you
I've
can
been
too,
doing
and
it now
with all the new technology that's coming out now, things are a lot easier. Wait till you see the stuff we're about to launch. It's really cool. It helps you
wait.
build portfolios, and you'd be surprised. It's not. I mean, again, you still have to be right. The market still has to accommodate, but the technology is really going to help people make decisions a lot quicker, a lot
Yeah.
easier.
Absolutely. Well, I will, Tom. I'll shoot you an email. I'll leave my contact information for Chestery, and I'll definitely accept them on his invitation.
You got it, man.
Awesome.
Send it.
All right.
Thanks, Mark.
Thank you, guys. Have a great day.
Thank you.
Great
Thanks
weekend.
for calling. You too. Okay, Keone in the dog pound says, does extremely high institutional ownership in a stock become a bad thing at a certain point, especially during market crashes?
That's an age-old question. I mean, are there stocks that don't have high institutional ownership? Are there stocks? I mean, the retail ownership in most underlyings is less than 20%. I mean, are there any stocks that don't have high institutional ownership at this point?
I don't know. I mean, it's just the only issue is if somebody's selling, if there's a market.
I mean,
download. If you're not
the
selling,
retail-
it could go both ways. I mean, if somebody has to get out, typically it's retail. Excuse me, because they're leveraged on margin. They have a margin call. Excuse me, they got to get out. But if an institution, same thing, an institution, if they ever have to get out, that's going to put pressure on the stock.
Yeah, I mean, I think in most cases, it's a tough question because I don't think that there's any stocks that aren't, really heavily, and I know that they're writing to us and telling us that some have as high as 95 or 96%
Yeah.
institutional ownership, but I think every stock is in that 80 to 85, in most cases 90% institutional ownership. So is 96 a lot? It sounds like it. I think that's just the way the market is. I mean, look at the question here is like with Enphase, ENPH. I'm not sure where it's trading right now, but that stock has been another PIG pig for quite some time. Where's Enphase right now, Scott?
Tom, you're spot on. It says 80% for the S&P 500.
Right. And where's Enphase trading?
What is the
ENPH.
symbol for Enphase?
ENPH. I mean, I used to
ENPH.
trade it pretty actively.
42.85
Okay.
down 43 cents.
Yeah, and I mean, this is a stock that's gone from 120 down to 30-ish. Now it's trading for 40. I mean, and if it's got 96% institutional ownership, that should answer your question. I mean, it hasn't helped this stock. But Enphase also was grossly overpriced and was one of those, it was almost like a meme stock for a while, and then it came back to reality.
Yeah.
Yeah. but it's been stuck in, yeah.
Okay. Next says, could you spend more time on futures? For instance, yesterday futures moved up through the night and then made a big move down approaching the open. Who are these people?
These are the bad people.
Who
These
are
are
these
bad
people?
people. These are domestic terrorists.
Who are these people?
Who
I
are these
love
people that wake up in the middle of the night to sell them? I woke up in the middle of the night 2 nights ago when they were
Tom
up 30.
is one of those people.
And I sold them, and I covered them 10 points lower, and then they dropped 100. They were down another 50 today.
It's the most liquid product, or one of the most on the security side.
Who
It's
are
the
these
most
people?
liquid.
They're everybody in the whole freaking world.
Everybody, and you got people who think they're going up. You got people who think they're going down. It's also could be movement because remember, overnight, other markets around the world are open, so you might have people hedging. There's a variety of reasons, but there's no answer of there's people or somebody behind a curtain who's pulling the strings, getting the market to go up and getting it to go down. It is pure supply and demand. If people want to buy, it's going to go up. If people want to sell, it's going to go down. Easy.
We were talking about the old days, and like 30, 40 years ago, some huge trader somewhere, they could move the market a little bit because like $100 million would move the market,
Not
back
today.
in the 80s. Today,
Yeah.
you could move the market. I don't care if you're BlackRock, you're not moving the market. So it doesn't matter. Blackstone, BlackRock, whatever. Nobody's moving.
One of the things I like to say about the market, listen, they are what they are. So, it's the only asset class that you can trade either side. So you can come in and say, wow, that car is too high, or the eggs are too high, or the house is too high, et cetera, but you can't sell it.
Right.
Here, you could sell it. If you think something's too high, you get short it. So, it is the purest form of capitalism, and the markets so long as you're trading something that's liquid, we're saying, some symbols are not, but S&Ps, ES futures, that's it. You want to trade something on the security side that's liquid, there you go. It's like trading SPY. If you look at how many shares of SPY have traded already today,
17 million.
26 million shares of SPY have traded today. It's, penny, 2 pennies wide.
Yep.
We talk about it and saying, look, you're not getting a better market. This is what it is. Now, it could be higher, it could be lower in the next 10, 15 minutes, hour, 2 hours, 2 days. It doesn't matter. Right now, that's the market. So when you see S&Ps up overnight, it's because there's more buyers than sellers. I'm not trying to be funny. And then there's more sellers than buyers when it's breaking. So, today, while we've been doing this show, the S&Ps have already moved. They've had a 30, 40-point range while we've just been doing the show.
Wow.
It doesn't mean things are priced incorrectly. It just means at the moment, this is where bids and offers are.
There you go. The dog pond, and I'm not sure this is written correctly, Dumb Nick. What are your thoughts on the idea of IV being bigger than realized volatility, but fat tail events happen more often than they should statistically? Do you guys ever hedge?
Yeah, so implied volatility. So Nick, this is a fun question, because think about this for a second. You're asking, what are your thoughts on implied volatility being greater than realized volatility? And if you think about it, implied volatility, which is what's going to happen in the future, or what may happen in the future, has to be, because implied volatility means looking out into the future, and realized volatility is looking backwards, what actually happened. There's no way that the future can be underpriced for.
Well, it could be more certain than the past.
That's right.
Right. You can't have more certainty.
Realized volatility is always going to be less than implied volatility. Now, again, 15% of the time, realized will be higher, but that's irrelevant. The way volatility is priced is implied volatility is priced higher than realized volatility. That's the whole reason that people like me sell premium. But fat tail events do happen statistically way more than in the markets, way more than they should statistically. That's what we call, there's some famous books written about this, Fooled by Randomness and things like that, where essentially they're saying, even though it requires an outlier move and has like less than a 1% chance, that 1% chance happens way more than a 1% chance is supposed to happen. And that's the beauty of markets, and that's why you should always be long the crap. I would argue that that's that's kind of a Nassim Taleb way to look at markets and trading, and it's a very academic approach, but I believe it's a failed approach for individual investors and for traders. And I would strongly recommend that if you're playing for a one-hit wonder, it's an absolutely stupid way to trade. Do we hedge? Of course we hedge. It's not a big part of what we do. In fact, I don't love to hedge, but do we hedge? Certainly. But the reason that implied volatility or future moves relative to what actually happens, they have to be priced on top of that. And that's the reason, again, that people sell options. I mean, you're not going to sell them at fair value. You're not going to sell them under fair value. You're going to sell them at a premium to fair value, and you're going to hope that you stay inside of that range. And then when you do get those fat tail events, that's when you get hurt.
Okay, there you go. Nick?
It's a great topic, though, because there's so many fun articles and books written on this and classes taught about this. I mean, from MIT to NYU, this is a topic that gets debated all the time. We feel very strongly about selling implied because realized is lower.
Okay, there you go. Let's take a call. Mike from Pennsylvania. Hi, Mike.
So, Mike,
Hey guys,
What's
you want to
up?
start with a true or not, or just get into it?
True or not? Go ahead.
Benjamin Netanyahu and his brother Jonathan graduated from high school in suburban Philadelphia.
I think that's true. He went to college. I think he went to college. I'm going to say it's true because I'm saying yes.
Really?
Sounds like it's true, just based on the question. What do you got, Mike? What is it?
Yeah, it's true. His father was teaching at some college,
Yeah.
but he never went to the graduation because he had to go to the IDF, Israeli Defense Forces.
I never went to my graduation because I had to go to Jones Beach with my friends.
Oh, my. There you go.
That's a beach on Long Island. But we had to decide graduation or Jones Beach.
Really? You didn't care about graduation?
High school graduation?
Yeah.
No, I went to Jones Beach. with all
Okay,
my
so let me
friends.
ask you a question. Does Tom care about anything?
It's true.
Right?
Backed up the car.
Just like birthdays, graduations,
We went to Jones
anniversaries.
Beach.
You don't celebrate.
No celebrating anything for you. Why?
Like he was
You're so
supposed to
weird.
graduate. Did you go to your college
Why?
graduation?
Technically, I went to my college graduation, but we didn't really go.
Oh, my God.
I'm
My
not
high school
asking.
graduation, I was so happy to be free because I went
Right.
to an all-girls Catholic school.
Oof. Oof. So that explains
Oof,
a lot.
A million times. I was so happy that I was finally free. And then my college graduation, I was so happy because I was graduating with honors. It was amazing. I loved it. I don't
Let's
know.
go back
I
to
don't
the
get
all-girls Let's go back to the all-girls Catholic.
No, let's not.
I graduated
Let's
high
not.
school. I graduated high school early, so I didn't.
Oh, you did? So you
Yeah,
weren't
of
with your
course- of
buddies?
course you
or-
did.
No.
You did?
Yeah. Yeah.
Of course you did.
Yeah.
Of course you did.
Yeah.
Okay.
All right, Mike, what do you got?
Okay, so Jeff told me I have to do like White House style, so I'm going to talk about the sale of Tastytrade. And there's this picture when the folks from IG came over. You're at some outdoor thing. It's COVID. You're outside. There's heaters. There's a protective thing.
Yeah,
there's,
yeah, yeah.
True.
You,
That's
you
true.
and Christy Ross and
Yeah.
June Felix and someone
Yeah.
else. So, really, two questions. I can see, Tom, you don't seem to be a patient guy or like small talk. So, in that conversation, are you getting down to brass tacks? And then the part two question is, if I was the buyer, I would be a little concerned about you being tied to the brand. I don't think it was much of a issue with Thinkorswim because it was a technology, but you guys kind of apologized for selling it. But just wondered if those discussions came up and what happened.
The main discussion that came up in that igloo, which I remember to this day, was did they have chicken Vesuvio on the bone? Because that restaurant made a great chicken Vesuvio, but we had to eat outdoors in the middle of winter in an igloo with a
Yeah, a
gas
bunch of heaters.
heater.
Yeah.
Christy doesn't eat chicken on the bone.
No, the thing no, she doesn't. But the thing I remember most about that meeting, which was really funny, is that Christy tried to embarrass me because
Oh, yeah, I remember that.
they go, what do you guys want to drink? I go, I don't know, I'll have a beer. And Christy goes, I'll have a bourbon, just straight up.
Neat.
Yeah. And I'm
That's how I
like,
like
oh,
them.
you bitch.
Atta
You,
girl,
you
Christy.
totally tried to show me up. You order a straight
He's
bourbon
like, a beer.
and I'll have a beer. I'm like, I gave her shit about that for like the next 2 years. But no, this was, listen, we built an amazing company. Tasty was an amazing company, and there wasn't much to discuss. Either either you want it or you don't. And the stuff we build is really good, and it turned out to be the best asset they own.
Excellent. All right.
Yeah. Thanks,
I got-
Bank.
All right, talk to you.
Hi,
Bye.
man. Take care.
Thanks.
Bye. Okay, next. Recently, I've been trying to use a trade scanner. The problem I keep running into is finding spreads with good buying power efficiency that end up having no open interest or volume. Completely untradeable. What do you suggest? Do you use any scanning tools, or do you have a different workflow for finding good spread candidates efficiently?
Yeah, I wrote back to this person and I said, the problem with trade scanners is that this is a spread scanner, is that you have to start with a universe of high option volume. So then it's fine. The problem is that sometimes the platforms that have spread scanners don't allow you to select from what group of stocks you're looking at. So they have no value unless you can choose high option volume or extremely liquid underlyings.
And Tasty has that. You can go look.
It does, but Tasty doesn't have a spread scanner.
No spread scanner, but you can look for symbols that have high option volume.
Yeah, like we didn't build a spread scanner on Tasty, but on Thinkorswim we built a spread scanner. So you can do it, but I don't think we allow you to on Thinkorswim when we built it, I don't think you could choose I'm not sure how narrow you could get. I don't remember how narrow you can get with the universe of stocks that you're scanning. But if you scan for high option volume, or you scan for very liquid underlyings, like 4-star liquidity underlyings, that's how you find decent spreads if you're using a spread scanner. You can't trade illiquid stocks, and you can't trade spreads in illiquid stocks. It's going to keep showing up all these crappy things you'll just waste a ton of your time.
Yeah.
Okay.
Yeah.
Mark in the dog pound says, what do you think about a pairs trade? CL and GC, notable divergence from Feb 28.
Notable divergence, Mark. You're exactly right. I would not consider crude oil and gold to be a classic pair. I mean, at this point, with gold selling off almost $600 the last 2 days. What's it down today? 300, and it was down
282.
Yeah. I mean, it's basically down $600 in 2 days, and crude oil. What's crude oil doing right now, Scott? It's up a little bit.
It's $1, up $1.04, $96.50.
So you've got crude oil near its recent highs and gold near its recent lows. If you wanted to trade it, sure, go ahead. But it's not really like in order to
don't go to sleep thinking you have a great hedge.
Here's pairs trades. In order for pairs trades to have reversion to the mean type of opportunity, you really need to have high correlation. And I can't, off the top of my head, tell you what the correlation is between crude oil and gold, but it's not going to be high. Okay, it's not going to be high. It has diverged, but it's not going to be high.
Okay.
I mean, sure, if you want to do it, just do the micros. MGC, MCL. Let me just think for a second. MGC, MCL. It probably is. It's probably 1-to-1. I have to look at it on paper, but vol adjusted, I'm guessing it's probably 1-to-1.
All right. Next up. Oof, there's a lot of questions on this one. With the talk of quarterly earnings announcements changing from every three months to 6 months, will it affect trading volatility? Will it affect the profits of trading firms? If so, are they going to block the change? Will this lead to more passive investing? Will it give opportunity to some companies to hide their deficiencies? And number 5, will this lead some traders to have privileged information because of the longer duration between earnings? Take it away.
Wow.
Well, as someone that has run a public company, I hated quarterly earnings reports. They suck. As someone who loves to trade, I love quarterly earnings reports because it just gives more opportunity for trading. In Europe, we were bought out. Our last company was bought out by a stock that trades on the FTSE 100, and they only have earnings every 6 months. Like they had earnings this morning, and then they have earnings 6 months from now. It does knock a little volatility out of the stock, but I mean, for the companies themselves, every 6 months is a way better use of your time. You don't waste all these resources preparing for, a meaningless earnings report. How much is your business going to change every 3 months? So from a company standpoint, I fully support, twice a year instead of quarterly. I think from a trading profits of trading firms, it's going to hurt them a little bit. And
I don't know. I'd be curious to see what percent, of the profits for high frequency firms come around earnings. I'm going to guess.
I don't care about high frequency firms. It's not about for retail online firms like Robinhood or Tasty.
Oh,
or
talking
whatever.
about that.
Yeah.
Oh, so retail firms, people won't be trading as much. That for sure. But I don't think that's, it's not massive.
I don't think it gives you an opportunity to hide some of your deficiencies.
Will
Well, I mean, that's
passive
if it's giving you to
investing?
hide, that means you're, that's fraud.
Yeah.
So no, and it's not going to give traders any privileged information
No, I
because
don't
long
see how.
duration traders don't know anything.
Right.
Yeah. No, I don't think.
They
Because
don't
of
know
the
anything.
longer duration between earnings.
No, I don't think number 4 and 5 come into play, and I don't even think 3 comes into play. I think it will take a little bit of the profits away. I think it's bad for traders and great for companies. I don't know what's going to end up. It's only a proposal.
Right. Oh. there you
I
go.
mean, I will say though, now with this administration, proposals are moving at a much faster clip than they used to. So,
Yeah, I mean, listen, this is not something that, I wouldn't. It wouldn't bother me if they changed it to every 6 months.
As a trader, you don't feel it's going to make a huge difference.
No, as a trader, I think it would hurt me a little bit.
you're going to lose out on
But a little
50%.
bit, but-
You're losing out on 50% of your earnings place.
Yeah. I think it's going to hurt me a little bit as a trader, but I can understand if I ran a public company.
Yeah.
There's
You're literally rolling from one to the next. Like you finish and then you take a deep breath and
You
you're like,
waste
okay,
so
basically like a
much
few weeks
time.
later. Then
Yeah.
a few weeks later, you're like, okay, we're going to start this again.
It's like you have to have an entire team that just prepares earnings. It sucks.
Yeah.
Oh.
Yeah.
Yeah. Okay. Dog pound, Hanukkah? Is that like the camera? Or was that
It's like,
Hanukkah.
it's like
It's
Hanukkah.
like a Monaco with a K.
It's like Hanukkah.
Hanukkah is a
It's
Hanukkah.
like, okay, got
It's
it.
a Monaco.
There you go. Is it Monica with a K? All right. I was taught 1 daily ATR per week is a decent way to calculate time to target for a stock from a good daily level on the charts. Your thoughts, please. Average true range is
Average true
ATR.
range. Yeah, average ATR is average true range. It's kind of just like a normal. It's essentially just looking at standard deviations, and you can look at your option delta. Average true range is essentially 16 delta options, high or low. It's how we look at expected move. I don't. When you say I was taught 1 daily average true range per week is a decent way to calculate time to target. You can look at your option montage on any platform now, and you can, whatever expiration you pick, you can look at the 16 delta, and you can get your average true range, or you can adjust it to the 30. Well, you can choose whatever you want, but that's how I would look at it for whatever the time frame you select. It doesn't have to be daily. It could be weekly. It could be monthly. It could be quarterly. It doesn't make a difference, right? Do we have an issue with it? Of course not. Is it something we do? The answer is probably not, because
Right.
we just use the option deltas instead. It's way easier, and it gives you a ton more choices. But if you want to do that, sure, go ahead. It's fine.
All right, there you go.
Yeah, I mean, I got no issue with it. average true range. A lot of technicians use average true range, but I think it's kind of like old school. If you just use options now, it's so much easier.
Okay, let's do some market talk.
Yes. So Bitcoin selling off a little bit, back under 70,000. Oil, as we said, it's up a little over $1.96 and change. SPOOs down 37. While we've been doing the show, they've been down almost 60 and down 22. So it's kind of in the middle of that range. Gold's down 288. NASDAQ down 157. Silver down 7.5. VIX cash is up 18 cents. VIX future, I'm sorry, saying it backward. VIX futures up 18 cents. VIX cash is up 40 cents. Reddit, sorry, not Reddit. Moo had the earnings last night, well within the range. It's off the low. It was down about 30 on the opening, and now it's down about 10.
Yeah,
So-
the positions came in a little bit. It didn't come in as
Yeah.
much as I thought.
Yeah, so not a surprise to me that I think they were really good numbers, but they, obviously the market was expecting something amazing. So.
Yeah, yep. I covered my Moo position on the opening today. Just took the profits on that. I needed to offset some of the losses in gold.
Yep.
That's how sometimes it be.
That's how sometimes it be. Yeah, looking around today, the strongest stock has kind of been Apple, but other than that, everything's a little bit lower. Market looks heavy today.
Market does look heavy. That's
Yeah.
usually when it turns around and ends up like up 50 on the
Okay,
day.
well,
but it
here's my issue today. It is
triple
Thursday,
witching tomorrow.
Triple witching tomorrow on the opening. It's Thursday. The last 5 triple witchings from Thursday night to Friday morning, it's opened down. But that's really rare because out of the last 26 years, 19 of them have been higher. So there's a pretty good chance that between Thursday night and Friday morning, the market will be up a little bit, but who knows? I always just get really nervous about shorting them going into the close of Thursday of expiration. Tomorrow's the composite opening in the S&P, so you got to be, I wouldn't have any 0 days or 1 days on, 1 DT on right here. I'd be rolling out to April and on everything. But that does make me a little bit nervous. Other than that, gold and silver are the story of the day. Everybody thought it was going to be crude oil. It's gold and silver.
Yeah. And somebody had asked that we're talking about expiration tomorrow. Somebody had asked about the ES contract and when it's time to roll and when it's best time to trade because we have moved from March to June. So if you still have a position on, my guess is your futures department, whatever firm you're trading, they have already done it for you or they're going to. But if you do still have a futures position on, you got to be careful because if you could, your firm might allow you to keep the March on, but the March is going to come off to SPX cash tomorrow. So you need to just keep that in mind. So if you want to move it out, you need to do that before tonight. Or actually tomorrow morning, I shouldn't say. It's still trade till through tomorrow morning. I think it stops. I don't know if it stops at 8 or 8:30, but it settles. It's Central Time, but it settles to SPX.
So tomorrow, we do this show Monday, Tuesday, Wednesday, and Thursday from 9 to 10, Scott, myself, and Sol. Tomorrow morning, we will drop a new episode of Unleashed. And tomorrow, Scott and I, we're going to talk about taking on problems with college tuition. Where are the biggest hurdles? What do we need to do to change it? And it's kind of a question we've battled with before, but we wanted to attack it from a different direction. We also have a couple of podcasts coming out today, especially one with Dylan and myself. So if you used to love the old Truth or Skepticism, we're right back at it. This time we're taking on the war machine and how do you trade crude oil and how do you deal with stupid politicians. But
It's like, so you can't fix stupid. Before we
can't
go,
teach stupid, that's right.
Before we go, I've got to ask. Inquiring minds want to know.
Yeah.
Because the NCAA tournament is starting today.
Yes.
Do you have a sleeper?
I have a sleeper.
Are you
A
gonna share it?
sleeper. Yes, it's not Miami of Ohio, just so you know.
I'm going Miami, Ohio. Just asking.
Did they win last night?
Yeah, they crushed them.
Yeah, they crushed them. They
They won by 10. They were 7.5-point dogs. Nobody believes 31-0 was real. Tennessee's going to be an issue. I think they could take them down. I've got them going to the Final Four. It's aggressive.
It's very aggressive. My sleeper is St. John's.
Yeah, St. John's. I got them going pretty far.
My sleeper is St. John's. If they can, they're probably gonna lose first round, but my sleeper is St. John's.
See, same thing with Miami. Listen, I got to get a little love to my alma mater.
Yeah, I got to go
course.
back into my growing up days of the Lou Carnesecca and
Lou Carnesecca.
Lou Carnesecca days, but I'm gonna go with my sleeper is St. John's.
And that's Patino, right?
Yeah, Patino.
Yeah.
It's a long shot.
I mean, I think they're a 4 or 5.
Yeah, but they got to get through like Duke and other.
Yeah, listen, everybody's getting through. Listen, Duke's good.
Yeah.
Duke's good. Arizona's good.
Yep.
Duke's good. It's gonna be fun. I mean, to me, I just love the tournament. Just love the action. You just gotta hope there's some upsets and Cinderellas.
It's okay.
Right?
College
Oh my
basketball.
God, please stop. Oh, sorry. It's not the same as a 90-pound woman eating a 10-pound burrito in 3 minutes. On that note, everybody, thank you for watching. Happy Thursday. Have a good weekend. Remember, Unleash tomorrow, and we will see you back live Monday through Thursday next week, 9 a.m. Central.
Bye.
/ take us out.